a very warm welcome you with World Business Report. I'm Sally Bundock. Also in the programme, has London's super prime property market finally peaked? We'll look in the crystal ball, but let's start with the oil price, which has fallen to levels not seen since 2004, surpassing the lows seen during the global financial crisis in 2008. A worldwide oversupply has dramatically driven down the price of oil, with suppliers failing to reach agreements to address the glut. Just 18 months ago, Brent crude was trading at around $115 per barrel. Since then, it has tanked, with it briefly hitting $36.05 a barrel in the last 24 hours before recovering slightly. In the US, a gallon of gas now costs less than $2 for the first time since March of 2009, and that story is mirrored around the world. For oil-producing nations, the picture isn't as rosy. The commodity-related currencies of Russia, Mexico and Norway all falling against the dollar, while Venezuela looks like it could be on the brink of financial ruin unless the price recovers soon. Well, Neil Passmore, CEO of Hannam and Partners, which is a financial advisory firm focusing on natural resources, as you can see, is here to give us some perspective on all of this. Neil, thanks for coming in. It's just been a theme for this year, hasn't it? The fact that the price of oil just seems to be going lower and lower. Your thoughts on this last 24 hours?
Look, I think you're right. It's been a tough year, and there's no real rebate on that going into the back end of the year. And look, as you just say, it's been a year of uncoordinated action on the supply side. Huge sort of wall of global supply that hasn't really suffered any of the setbacks that many in the market expected from one quarter or another. And demand side has been weak. A lot of the consumers of the excess marginal barrel of oil in the market a year and a half ago are struggling domestically, using that a little bit less than they were.
Now, looking into the new year, it looks like none of those fundamentals are going to change.
Look, sadly, I think in the near term, that's exactly right. If we stick with the demand side, very hard to see either in developed economies that, for the main part, are enjoying a sort of a lull in gas consumption and the need for sort of power heating. Certainly, a warm kind of northern hemisphere. We're not going to see a spike in demand. Similarly, a lot of the emerging economies, if one just takes the old sort of Goldman Sachs BRICS, China, Brazil, Russia, very hard to look into countries like that are suffering real domestic issues at the moment and see them growing their demand sharply. Supply, likewise. I think the face of so much political risk in the world, it's nonetheless proven a huge surprise to most analysts and commentators how resilient supply from places like Nigeria, Iraq, Iran has remained.
And talking about supply next year in the US, do you think some of those companies who have been heavily supported this year, those that get oil out of the ground through fracking, which is a very expensive process, will manage to get through again next year? The support will still be there for them, despite the fact that they're probably not making any money?
Yeah, look, I think there is a wall of capital waiting in the US to invest still, but a lot of that is now sort of quite opportunistic in some senses, sort of vulture-like capital. And I think we are going to see a much harder time for a lot of the US producers this coming year. In particular, first half of this year, I think we saw about $100 million flow into sort of European, UK quoted oil and gas companies. An astonishing 35 billion went into US companies of the same ilk as big equity investors sought to prop them up. But I think a lot of them won't necessarily find it as easy to be recapitalized. A lot of those with a borrowing base that's going to be recalibrated are going to struggle with their debt.
All right. Neil Passmore, thank you so much for coming in. So a bit of a shake-up in the US supply side. Thank you very much. Let's look at another market that many like.